There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome out to Trade Justice Podcast, episode number 19. Tim, can you believe we're on 19 already?
19's amazing. You better let's check your audio real quick. Noah, is Matt coming through okay?
Matt is coming through okay.
Good.
Awesome.
Yeah, 19. Matt, when was our first one?
Oh, hell.
June?
About 2 months? I want to say 2 months ago. I would say maybe a little bit longer, but I would say we've been going on now about 2 months. We're getting tremendous traction out there, guys. That's a testament to you guys that are listening to the podcast, going out there on iTunes, reviewing it, giving us that rock solid 5 stars. Keep it up, guys. Let's make this thing epic and get it out there to the masses and change some lives. And we can't do it without the audience. So once again, we appreciate you guys listening. We appreciate you guys going to iTunes. And for those of you who have not yet went to iTunes and rated the podcast, please do. Will be much appreciated. Let me go ahead and bring on kind of the other guest out there. Tim, obviously my co-host, Noah Davidson. Noah, how are you?
Fantastic,
awesome,
as always.
Awesome. Gino, how are you doing?
Doing pretty good, Matt.
Doing pretty good. How'd the market treat you guys today?
Same as always. I was expecting a down day coming out of Friday, but after looking at the futures last night, I couldn't believe how much they were up. And surprisingly, really bullish day today. Unfortunately, Matt, I had a whole bunch of plays, and if you look at our scouting report I put up on the weekends, if you want to go there and check out the TackleTrading.com, the scouting report, I actually put up quite a few beautiful setups for the downside.
Mm-hmm.
I don't know if you guys caught those triggers or not. But unfortunately, the market had a handful of bullish ones. That's why we do it. Put the bullish ones out there. Their triggers are in there, and we still have some that carried over from last week that are really kicking butt.
Mm-hmm.
And congratulations to you guys who have those and move your stops up. That's all I could say.
Yeah, no, those bullish trades certainly worked out pretty good today. I'll tell you right now, my IWM put play didn't work out very well today.
I put my DIA put play with a trigger and I didn't get in.
Oh,
Great thing.
I got in. I got in on. I've scaled in over the last basically couple days, Thursday, Friday last week, and it was looking so sexy on Friday about midday. I mean, just unreal sexy. And I thought for sure we were going to get it coming into the market this week. We were getting some downward pressure. That's not what the market wanted to do, and that's kind of why what Gino said. He said, that's why we do them both, guys. How about you, Tim? How'd the market treat you?
Well, probably the biggest thing from today that I decided was I'm going to start buying physical silver. I don't know what happened.
Yes.
I was talking to a group of individuals this morning, and about 90% of them told me they'd never bought physical metals before. So I just decided, hey, I'm going to just start buying it and giving it as gifts. Like, the silver coins are like $20. So, like, my mother-in-law's birthday was last week, and I didn't buy her a gift, so I'm going to get her some silver coins. And, Mom's birthday's coming up. I just am trying to find a way to promote the idea to everybody out there. They've got to realize you've got to have different asset classes.
Is it a talking point with the people you have in your life that you want to start, giving them a reason to say, hey, why are you giving me silver? Well, because your dollar's going to die, and I'm trying to get you to think about something else.
Yeah, exactly. And I don't,
I like it.
It's kind of hard to bring it up. Well, you need more education. But if you get them excited about owning something, maybe they'll just naturally be interested in it. You know what I'm saying?
Mm-hmm. No, absolutely I do. Obviously, we're all big believers in physical metals and gold and silver, commodities and whatnot. And honestly, for those of you listening out there, if you've never invested in or traded or bought, precious metals, it's really not that difficult to do. It's actually pretty straightforward. I'm sure there's some local areas in your community that sells precious metals and whatnot. And I think it's important to have them as part of your portfolio, not only as an investment vehicle, but as a protection vehicle. Now, talk to them about kind of why you feel it's important to protect against the dollar.
Well, this is actually something I have been studying long and hard, and it's really just kind of the policies and the general regulations that they have going on with the Federal Reserve's policies and the government's, Congress's tax and spending policies. Their target is to continue weakening the dollar. They've got a target over the next 15 years to depreciate the dollar an additional 33%, and it's already down 33% over the last decade. So the weak dollar policy was basically it's just hurting your purchasing power. Mm-hmm. And there's quite a few people out there who believe that the dollar, the good old greenback, is in a position postured where it could die, and currencies do go. They do from time to time collapse. And if that is the case, having silver, having gold, having physical commodities is your protective hedge.
Noah, I was doing a little bit of research last night on just this very topic, and I was basically looking at the future of the reserve currency and all of that jazz, and kind of where we're leading from a reserve standpoint. And I was specifically before I even did that, I was looking at inflation and specifically hyperinflation. And over the last 50 years, there has literally been about 45 currencies that have hyperinflated. Not inflated, every currency inflates to some degree because we all print money. But at the same time, 45 currencies in the last 50 years, some of them have gone by. You're talking about things that are going in South America with Argentina and Peru, and what happened with Brazil in the 90s, and Poland, Russia in the 90s, Zimbabwe just a few years ago. Well,
Argentina is currently in default. They are defaulting again. Just after winning the World Cup, they are now losing in the big global currency situation.
Which one do you think people from Argentina care about more?
I'll tell you what. You ever meet somebody from Argentina that doesn't wear a gold chain around their neck, that doesn't have that general belief in commodities? Because they've been through it, they experience it. And down there in the southern hemisphere, they have a little thing they call cuenten sus gallinas, which means count your chickens, because they've been through currency collapse. When your currency doesn't buy the things that you're used to buying, what do you do to sustain your family? What do you do to sustain your lifestyle?
And I think that's one of the biggest problems down there now.
Hold on a sec. To do that. Can I hear Noah say that phrase again? It was so wonderfully spoken.
Bueno, en español se dice cuenten sus gallinas.
I love it.
That means count your chickens.
First of all, that is not as good as when Noah pulled out the German episode, the other podcast. That one I think will live in infamy. It was awesome. I think that was when we were trying to pronounce the one guy's name. I can't even. So it was Schwartzel. I can't
That's one to speed. I don't know.
That was a good one too. But no, I think you're onto something there. When a nation and a populace has been through a devaluation or hyperinflationary standpoint, they certainly have a different perspective on the value of money or the lack thereof. And here in America, we even though a lot of people haven't noticed it, we're going through such a phase right now, and it's probably going to escalate. And so I think what Tim's doing in terms of trying to get the people that he loves in his life to just recognize, giving them a talking point, I think is pretty admirable.
Well, and I'll say great timing, Tim. You're picking it up while the spot price of silver is down in where it's been the lowest for the last several years. So, good timing on purchasing it. It's the fact that the way that they play the paper aspect of the precious metals has kept the prices subdued, and they're currently trading near lows for the last 5 years or so. So
yeah, you're looking at lows at 18, somewhere around 18. You're currently about on the ETF on SLV at 1887.
Yep.
I see very little risk in investing in silver right now. And maybe it's going to take a while to turn it around. Because there's still some downward pressure here, like you mentioned. But at the same time, I think it's a wonderful time to start picking up some precious metals in your portfolio.
Now, Matt, it's a great subject. And just out of curiosity, Tim, you're doing physical. Are you actually doing paper metal, silver also? Because today I picked up some silver ETF.
Nice. No, well, I've played SLV before, yes, and there's nothing wrong with that, and you can do naked puts on that. It's optionable. You got all the trading stuff. But the reason I was thinking about the physical, Gino, is that I'm talking about people who
don't know how to trade.
Yeah, well, then maybe they're not interested in trading either, but they also need It's a hard subject to bring up when, to talk about the economy. That'll ruin a nice Sunday dinner real quick. So it's just a way for me to try to spark some interest in that conversation.
I'll tell you what is a great first date topic for those of you who are single. You can go out and talk about monetary policy, the Federal Reserve, and then precious metals as a hedge, and it's very easy to get a first date to run and crawl out the bathroom window.
You can
I
make
don't know. When
somebody
I
very
talk about
scared,
precious
no
metals
doubt.
to my wife, she wants to see the box and the ring and the necklace. That's the only precious metal she's thinking about.
Hey, any way to do it, buddy. Any way to do it.
They're listening about precious metals as long as they can wear it.
No doubt, no doubt. Hey, everybody, you're listening to the Trading Justice podcast. We're here with Noah Davidson, Gino Poore, Tim Justice. And here in just a little bit, we're going to have a guest come on by the name of Jake Pelly. And Jake is Gino's student, but we'll save his introduction for just a minute. Looking into this coming week, guys, where do you see the market going this week? Obviously, we were a little, I want to say shocked, but I was a little surprised by the strength of the upward movement today.
I wasn't shocked per se. I saw a little lower volume on it overall. I think the market's resistance to wanting to go down in general showed some resilience. It's in an area where the reason we've all been thinking about that move down is because of the technicals. We are all skilled technicians and understand the price points where we're likely to see prices move a certain direction. And I think it was interesting because it's in that zone. We all saw the signs coming and we all kind of had the same opinion. But what I've learned over the years is that my opinion's not the one that counts. It's the market's opinion that I have to respect. And so you trade what you see, not what you think. And if it doesn't go the way you think it needs to go, then you don't fight it.
Absolutely. We do not move the market. What about you, Tim? What are you kind of looking forward to this week now that we've kind of seen how the week is starting off?
Thank you for asking. I had a big write-up at tackletrading.com on the newsletter. I kind of highlighted some of the mindset of last week and this week as we make a transition. Anybody who's listening, go check us out over there and get that newsletter that I wrote up. I post about it on Facebook and all of our social media handles as well. My big thing, Matt, is that this week has two separate Fed events. In fact, there are three if you count the Philly Fed. On Wednesday, the Fed minutes, the Philly Fed Manufacturing Index, and then Friday, and that's Thursday, and then Janet Yellen speaks on Friday, at that summit. And, I was thinking about it. You and I were talking about that the other day. I believe, Gino, we were even talking on the podcast about that. The more I think about it, I think that's the big event for the week. I thought the minutes maybe, but the minutes haven't been market movers lately. Anytime a Fed chair speaks about the economy, as the economy is in transition, I believe that has the potential to impact price action. Now, I personally don't think any of it is going to drive the price too much, but I do think that anything said now is going to shape future conversation. I've talked about this in my classes and with my mentor students and my colleagues and all you guys. I really think the volatility is coming in the fourth quarter this year. I don't necessarily think we're going to see major volatility during August or even the 1st of September as we're moving out of earnings season and all that. But the technicals never lie. You have to focus on that. I do want to tell you something funny that happened in my class earlier today, Matt, one of your students. I was talking about the markets, and we're looking at the S&P 500, and I asked everybody what they saw, and one of the answers was, well, it looks like it's in motive wave 5, blah, 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 and I just go, I couldn't handle it.
Or you're like, oh my goodness, Matt, you little...
What's you Elliott waivers, I don't know.
What's wrong with the Elliott wave?
I like to study it, but it makes my head hurt, and I always go, yeah, that could be, but I don't really count so good, so,
I try to tell them, it doesn't matter what wave you're in. It's higher highs, higher lows, but at the same time, it helps you with an expectation. It helps you build an expectation for the future.
Well, do you remember that, what was that religious group, the Drink the Kool-Aid group in Southern California, San Diego?
Is it the one that went on the comet?
Yeah, and they all died. Yeah.
I think I've heard the story about a dozen times with different cult leaders. But anyway,
yeah. They probably all would have believed in Elliott wave too.
What are you trying to say? I want to know what you're trying to say here.
So my favorite flavor of Kool-Aid is tropical punch.
Dude, tropical punch. That's the scapegoat of the Kool-Aids. That's just throwing everything together and trying to call it
I believe what you're looking for, Matt, is
passion fruit. Passion fruit. All right, what's wrong with strawberry? Okay, guys, I think we're going to add Jake Pelley to the call now. Jake, Gino, as I bring Jake on, let's see if he's connects here real quick. Now, Gino, Jake was your student, correct? Jacob, are you there?
I'm here. Can you hear me?
Jake, I can hear you loud and clear. You're on the Trading Justice podcast. How are you today?
Good. How are you?
Yeah, doing good. We brought you on live in session here. We got Noah Davidson, Tim Justice, Gino, and myself. And Jake, I got to say it's an absolute pleasure to have you on. I've heard so many of your stories from afar, and I can't say how impressed I have been at your journey as a trader. And just to kind of let everybody know kind of who you are a little bit, talk to us about kind of before you became a trader. What were you doing?
I was drawing blood at a hospital and doing human autopsies.
that really?
That is a killer career.
Yeah, I did not know that, Jake. So you're doing, oh, wow, interesting. I got some visuals in my head that I just can't get rid of right now. And so you're working at a hospital, working on some human bodies. And what made you even want to or have the desire to learn how to trade?
So, as you know, my dad passed away, and he left me and my brother some money. And so I wanted to figure out how to make it last, not be like most people who pretty much win the lottery and are broke next year. I wanted to make it so I could live off it for the rest of my life. So I did research, and I found that trading was the best way to go for me.
Awesome. And did your brothers join you?
Nope.
What? Did you talk to them about it? Did you try to get them to join? What happened there?
I try all the time to try to get them to join, but they think it's like sorcery and witchcraft what I'm doing. They pretty much think I'm stealing from people.
Oh, really? Just tell them you're stealing from the bank.
I try to tell them all the time the benefits of doing this, and they won't get on board.
Jake, I don't want to throw ethics into the middle of this. This is Tim Justice, by the way. Welcome. But, the markets are a zero-sum game. You very well may be stealing from people.
You can't think about it like that, though. But I get what you're saying. I really do. And so you decided to learn how to trade. And what was your first instinct? Did you pick up a book? I know you eventually went to the Rich Dad seminar. But kind of, how did you go about kind of, figuring out how to trade and whatnot?
So, Dave Ramsey has like a book list, and I went through his book list, and I read all of them. And then I read the Rich Dad, Poor Dad. And then I found out he had a 3-day class going on in town. So I took the 3-day class, and I really liked it. And so I signed up for mentorship, and I took pretty much every single program he had to offer at the time for stocks and trading. Mm-hmm.
So you basically, master trader, cash flow options, spread trader, lead options, those types of classes. And you took the classes, and as you were learning how to trade, what style of trading stood out to you during that 3-day training? When you were sitting there, and I don't know, who was your trainer? Was it Scott Stewart, Andy Tanner?
Yeah, Scott Stewart.
Scott Stewart. So when you were sitting in your training with Scott, what strategies or style of trading stood out to you at that time?
The covered call, because I've never heard of options before. And so my ears after the 3-day course were like bleeding from all the information he threw at me.
So the covered call stood out to you a little. And what the covered call is just owning stocks, selling call options on the stock you own, similar to a rental agreement in real estate and whatnot. So you got enthralled with the options and really kind of the selling of options. But is that what you currently do as well?
No. All I do is naked puts. 100% naked puts.
100% naked puts. That's amazing. Now, in terms of that naked put, you obviously didn't just start there. So, how was it? When was it you really kind of found that the naked put was the strategy that you were going to really kind of cash flow on?
I met with my mentor Gino, who's on this call today, I believe.
Yeah, Gino, how are you, buddy?
Hey, I'm here. How you guys doing?
Fantastic. So you met with Gino. Now I'm going to bring Gino in real quick. Gino, when you met Jacob for the first time, okay, we all have first impressions, always, every one of us. What was your first impression of Jake?
Well, Matt, as you know, we're all mentors here, and we've been in the business for a long time. And as a mentor, it's not just somebody who teaches or somebody who knows how to trade. The reason we do so good at it, all of us, and you could test to this, is being students ourselves. We're all students ourselves. And when we're talking to a student, we're trying to identify with them and think back in our past. How did that relate to where I was? I knew right where Jacob was. And one of the things I asked him is, how much money are you trading with? Are you risky, conservative? What kind of odds do you like? And one thing that he mentioned was he just wants to make money. Him and his wife are trying to decide, is this better than real estate? Real estate, you just stay home, you get a check. Your renters pay a check, and you open up the mail, there's your money. And I said, well, there's some really high odds strategies that where you can actually name your odds. By naked put, you can look at the delta and the probability of you winning. And I said, what odds do you like? And he said he liked very good odds. And I said, well, it's not a big return, but it's a consistent return. So that's where you want to start, is consistent. If you're happy with just a cash flow return of 1%, that's better than the bank. Who's going to give you 1% a month? He said he's more than happy with that. He wouldn't be greedy. And talking to him and find out his personality, he's not greedy. He had a large sum of money. And Jacob comes from a medical background, and he's very smart. And he's got security there. And I believe at the time his wife was still working. What was it, Walgreens, Jacob?
Walgreens, yeah.
Yeah, so they had security, and they were comfortable. And he wasn't looking to be a professional trader. He's actually doing good in real estate. And I'm not sure how many properties you owned at the time, Jacob, but you had some real estate going.
I own 2 properties.
Yeah. And, I said, well, let's use that as a correlation when we trade. Let's just bring in money on time, just like, because you understand real estate. Let's just switch it to the stock side. And the main thing is, with the amount of money you're working with, there's something called portfolio margin, which is an unfair advantage in trading. It really is. It gives you a lot of advantages if you know how to use it. If you don't know how to use it, it could be deadly. Just like anything, you have to have education. So he came down, and I remember Jacob, he came down the first day, I believe it was. You were kind of confused. You were kind of like most students. Your head was swelling with information. And I showed him how to turn some profit on stuff like oil and stuff like that, and some easy trades. And at the time, the volatility was high, so it was like taking candy from babies. It was just easy to make money. And so, Jacob, did you have your aha moment?
Well, first of all, Jake, when did you take Scott's training from Rich Dad?
Oh, man, it had to be like 3-4 years ago.
Yeah, was it 2011?
It might have been 2000. It might have been at the end of 2010.
So
yeah, it was 2010.
So end of 2010, and you mentored with Gino in 2011?
Yep.
All right, so you and from that moment on, were you just trading naked puts after the mentorship?
Just naked puts.
Just
That's
naked
all I
put.
trade.
And for the audience, kind of just explain what a naked put is.
So a naked put is you don't own the stock. It's an option, and what options are is one contract equals. You want me to explain all what options are, or just a naked put in general?
Well, just in general.
Like I'm a 5-year-old. Explain it to me like I'm 5 years old.
Like you're 5-year-old?
Yep.
Okay, I sell insurance.
Done.
That's it.
That's it, actually.
Well, I don't know. My 5-year-old doesn't know what insurance is, I don't think. So that might be explaining to my 15-year-old, but what about a 5-year-old?
I always explain it this way, Matt. It's the easiest, is you make a promise to buy the stock.
Mm-hmm.
So you make a promise to buy a stock, and it ensures the person who buys that the right to sell it to you.
Mm-hmm.
And it's insurance.
It's the number one form of insurance in the marketplace. And for the same reason, insurance companies make a lot of money. Jake has high probability. In fact, what deltas are you traditionally selling, Jake?
Deltas? I don't even look at Delta anymore. I just look. Gino sent me up a nice screener that's pretty much cheating.
Oh, that's.
Yeah, no, Jacob, don't tell him about that.
Wait, hold on a second. Hold on a second. Gino, I have known you for 10 years now. Why have I not been given this screener if it's cheating?
Yeah,
Matt,
exactly. Hey, back up here. I'm having this exact same sentiment right now. What gives? Not Gino.
Gino, I thought we were friends, buddy.
Well, you never asked.
Listen, if we don't know something, how are we supposed to ask for it? I'm
you give me a screener, I'll give you a screener.
Well, here's the good thing is that for all the listeners out there, Gino's putting in his hand-picked stocks over at Tackle Trading hedging.com on a scouting report.
And
so
a lot of
You know
those
what's
come
funny,
from the
Matt,
screener.
is Jacob, here's a thing that most people don't realize is I love selling options. In fact, Matt and his brother, Tim, they always mention me as the theta maker. And that's why when people call me and ask me, are you theta maker? I go, oh, you know Tim and Matt. And they go, yeah. Some people actually call me Mr. Swing. And
I call you the Theta King.
Yeah, so I'm a swing
it
trader,
couldn't- it
king,
couldn't
I'm
be
a theta
king.
maker. I don't matter who you talk to. But see, the thing is Jacob wasn't really interested in learning a lot of stock trades. I mean, he already knew like 20-some strategies. He was confused. He said, I want one strategy I can focus on that makes me money, period. Period. And so I said, okay, for 3 days, we're going to focus on one strategy. Some markets it can be better, some markets it's not. But you need to know everything. So he knows everything about that strategy, the adjustments. He'll talk about those. And that's what he does, and he's happy with the return.
Well, you know, the way I kind of like to see it is when you're as you grow as a trader and you're starting to learn the options market, you're just inundated with so many different strategies out there. Anything from debit trades to credit trades to Vega, Delta Theta, you name it. And it is absolutely overwhelming. And I think one of the most important things as a mentor is to be able to take who you are and really to develop a system around who you are and what you want to do. And I think that's the ultimate success out of, you know, Jacob's and Gino's mentorship was the fact that you know, Jake came in there with a strong desire to learn, but he just was a little overwhelmed with everything, and to be able to make it simple and to see that you come out of that and really for the last few years simply just trade the naked put and do as well as you have. And I want to talk about kind of your success as a trader, because you are, what was it, 2013, the Rich Dad Hall of Fame student?
I think it was 2012.
Was it 2012? How many, from a Hall of Fame perspective, and we'll talk about your experience as a Hall of Famer here in a second, but one of the reasons why you were nominated by Gino and ultimately the Hall of Fame student in 2012 was because of your success in selling naked puts. How many trades have you made over the last few years, just in terms of naked puts?
Thousands.
Thousands. Are we talking into the tens of thousands?
It might reach into the tens of thousands. Yeah, I'm going to say it's going into the tens of thousands.
So let's just put it at 10,000 then. How many unsuccessful trades have you had?
And naked puts?
Yeah.
None.
You've had now for the listeners out there, think about what Jake just said. He's had over 10,000 trades over the last few years, and he has never taken a loss. I want you to explain how that works, because that just seems from, I mean, even from me as a trader, I had losses today. You know, even from me as a trader, that seems just so amazing. And I've been doing this for 10 years. Now, thinking about some of our listeners out there who are just, you know, thinking about, okay, I want to learn how to trade. I don't know how to go about it. And you're talking about this naked put. How in the world have you had over 10,000 trades and never taken a loss?
It's knowing your strategy and knowing what to do in case something goes against you, how to work it to where you can still come out with profit.
Okay, good. Now, in terms of when you sell a naked put, you have a market-defined probability. And Jake, you say you no longer even look at the delta, but I'm assuming that delta is less than 10. Would that be accurate?
Yeah.
Typically.
Let's see here.
Okay, so
no, right now my delta's 33.
You're selling a 33 delta and still not taking losses?
Yeah.
Oh my God. I'm literally taking that.
Wow, 33.
That's high premiums on those two, right?
The best premium I got right now is yeah, they're looking pretty good right now.
Yeah, I was expecting you to say 6.
I was expecting 5. I was not expecting 33. Now, in terms of the 33, when you got a 33 delta, what that tells you as an option trader...
Well, it's a negative 33.
Well, yeah, because you're selling put options, right? So,
Right.
Are you sure it's
or
not a
call options too.
0.033?
No, it's negative.
Yeah, okay.
A negative 0.033?
No, it's negative 33. I'm looking at my screen right now.
So
okay.
So he has a 33 delta, which means he has 67% probability, but he still doesn't take a loss. I want to talk about kind of just one or two adjustment techniques. So when a trade starts going against you on the naked put, how do you adjust that to ensure you do not take a loss?
Oh, you know what it is? I have a trade right here that's not screening right. So I have a VIX screen that's messed up. So it's positive.
Yeah,
It's,
you're selling
34.
naked puts, you're going to have positive delta.
Yeah, it's 34 positive. It's messed up right now.
Okay, so
I had to look through all my stuff.
and what Jake is kind of talking about, guys, is basically all delta tells us is kind of the rate of change. It's positive or negative. Put options have a negative delta. When you sell them, you receive a positive delta, which means it's a bullish trade. That's all that means. Now, once again, coming back to your adjustment, if a stock, like, give me like, do you trade on oil, and what do you trade on?
I love trading oil. Slash CL, light sweet crude, the SPX, the Russell. I usually trade those three.
Okay,
So you're selling on cash settled indexes, right?
Correct.
Okay. Yeah. So you're selling on let's take an example, say on crude oil right now. Let's say you sell a crude oil contract, and how much time do you typically sell on that?
Usually 30 days. I always like to have 2 months in case I need to roll out.
Okay. So right now on crude oil, you got October, November, and December. We're exactly 30 days out from now is the October contract. Let's say hypothetically you sell the 90 contract. It's 19 delta on it. Let's say crude starts coming close to $90, which is where your risk is. How do you adjust that to ensure you do not get a loss?
The 90, that's too close in the money for me right now.
Okay.
I have one right now that's let's see here. I have one that's
85?
I'm at 82. I'm at 80.
Okay, so 80. That's a 1 delta. That's a 99% probability. So that 1% of the time it goes against you. How do you insure against the loss? What do you do to adjust?
There's 3 things you can do, and because it is a futures on an option, you really can't make it into the number one thing, make it into a cheap weekly spread using weekly options.
Mm-hmm.
You can use number 2, which is you can just take profit. I mean, if there's data that's there, just take the money. People are afraid of taking profit. Sure, it's not as big as I'd like it, but it's still money.
Mm-hmm.
And number 3 is to roll out. Roll out into another month, and you can always double down, or you can just roll out into another strike.
So you could roll it to, let's say you roll it to November then, or you roll it down to the 75 in November, whatever the case might be. You're going to roll it down, and you're consistently rolling it down until basically it expires worthless, correct?
Correct.
And that's how you've never taken a loss.
Yeah, and I've very rarely had a roll, if that.
Well, selling, I mean, when you look at the probability of it going down to 80 in the next 30 days, we had Steve Wong on, do you know Steve, Jake?
Steve Wong? He sounds familiar. I don't think we ever talked to each other.
Yeah, I mentioned your name to him because you guys kind of have the same style of trading. Both of you sell naked puts on the CL contract. And I mentioned, and he basically said the same thing. And so when we were talking to Steve the other day on the podcast, I basically went back in the last 2 years about how many times in 1 month time frames has this contract went, 10%, 15%, 20%. And over the last 2 years, it's never went that low. I mean, literally, you're picking up free money here.
Yeah, it's been pretty nice, this oil train. Lately, it was followed the Fibonacci's from the high to low, but
you can't talk Fibonacci's. Tim will blow his mind.
Oh, really? Okay.
Yeah, I think that would probably make me want to hang this headset up.
Well, let me just stop and back up. And
Jacob, the rest of us love Fibonacci.
This is a lot of fancy talk, and one of the things I have been learning is how to not talk so fancy. But I remember my first impression of Jake. You were in my master trader class, I believe, if I'm not mistaken.
I was.
And I have had thousands of students over the years, and not a lot of them really stick out. You were perhaps the one who asked the most questions. And interacted the most in class. I mean, it was very, very fun to have you in there because you were kind of helping me carry the class by your questions. So I think there's a voracious appetite to help you learn all of these fancy schmancy terms that you guys are throwing out. And I think that's the key. It's just starting out and having a curiosity and wanting to learn how these things work.
Well, I'll tell you right now, I have the same type of assessment. I love questions. And so for anybody out there that's listening, if you're in any type of training, I promise you your trainer wants questions because we work off those questions. And also it allows us to kind of see if you're, accepting the training, if you're understanding kind of the concept. And yeah, we are talking fancy terminology right now, and probably some of which people are like, what in the world are they talking about? Jacob,
hold on. If you like questions, I have a question, Matt.
Let's hear it.
Would you like to hear it? And maybe everybody around the room could answer this, because we're all traders. We all have our style. We all have had our experiences. And it makes, I'm thinking about Jake. I'm thinking about Steve. I'm thinking about Dean Beckett, some of the other traders we've had on the podcast. What are some of the key things that you do on a daily basis that give you the confidence you need to trade? Because I know that we all have this routine. Jake's been doing classes and stuff for 4 years. Gino's been trading for a long time. Matt, you and I, we've been trading 10 years now. We got into this stuff together. I mean, let's start with Gino. He's been quiet for a while. Gino, what do you think?
Well, what's the specific question? What do I do all the time?
No, what do you do every day? And what is a mandatory part of your day that allows you to build confidence and succeed as a trader?
Well, that's a great question, Tim, and this is probably way over everybody's head, but everybody has their routines and their watch list and their strategy. Some people approach the market like no, I can kind of guess he's a good directional trader. He'll look at the trend of the market and he'll get into that and stuff, and and which side of the market to be on. He's an expert at that. Sometimes I approach the market differently. I look at it like, where am I going to place my credit spread? Where am I going to go with this strategy? I'm going to find a candidate to fit my strategy. I'm not going to fit a strategy to the trend. But really, here's what's over most people's head. And this is how I matched up the strategy with our friend Jacob here is I wake up every day, and to be a trader, you got to be in control of your greed and fear. And what that means is this. When I asked Jacob what he'd be happy making, in fact, Jacob, why don't you tell him, what are you happy making percentage-wise a month? What are you happy making? That's what blows people away.
5%.
There you go. Now, when I talk to people, most people, and you guys probably get this from your students, they want to make 1,000% a month on their account.
Right.
Now, Jacob, if you do 2%, are you happy?
I'm happier with 5, but 2% still good.
Yeah, there you go. 2% still good. There's some people be like, no, I'm not going to go through the education to make 2%. Nah, I'm not going to go through the education to make 1%. Do you know Warren Buffett is happy with 2%, and he's one of the greatest investors of our time? Do you realize how much better that is than a bank or almost any other investment out there on a long-term, consistent basis? You know what my goal is? 1% a week, and I am just thrilled. So therefore, I'm not a good directional trader. A directional trader, they want to make 1,000% on a trade, or they lose. You know what I mean? And they have the chance to hit a home run. When you're doing a trade,
I'm going to cut you off there, Gino, for a second. I do think it's important that the audience understands you don't have to trade like Jake and Steve. These are just examples of what can work, though.
Right.
Because it took some time to. I think it takes everybody time to find their style and their groove, right?
Mm-hmm. Yeah, and that's what amazes me is like you, Tim. You're a theta maker too. Is I'm happy with these theta trades. You're not going to make home runs. You got to be comfortable and happy with a 5% return a month.
Well, guys, also kind of put that into perspective. 5% a month is still 60% yearly, and if you compound it, it's still 75%.
I'm happy with that. And
the
have you ever
market never does
you might
that.
say, Matt, you've had some months that were really, really killer and blow that away. And once you get bit by that bug, you're like, yeah, I don't want 5% a month. I want 100% a month. And I used to be like that. I used to do that.
And I think that's one of the things when you say, what's the routine? Actually, this is my different perspective. I have been, the first thing you said, Gino, was greed and fear, getting those under control. Mm-hmm. One of the things that I really had to struggle with was the greed and the fear, because when you make good money fast on a directional trade or intraday trade, you get a little addicted to it.
You get greedy.
An incredible drug. And one of my routines is honestly to hit the snooze button and sleep in. And
I love that.
This routine is really important because it means that I'm not there to influence my trading with my greed or my fear. So my routine is to automate it and to go with the high probability type scenarios that I don't have to monitor all the time, that I don't have to sit in front of, and that I don't mess up because I'm acting on fear or greed or impulse. Yeah.
And guys,
even with directional trades, I set those up with automated triggers and exit and entry strategies so that I don't get the greed bug making bad decisions.
Well, and I think that's very important because, even as veteran traders and, the collective trading experience here is literally about 45 years now in the marketplace collectively. Even as veteran traders, we are still prone to get greedy and we're still prone to get fearful because, let's face it, we all want to be right. We all want to make money. We don't want to lose money. And so as such, I love what Noah said. I love what everybody's saying here. You got to automate it. You got to automate it from an entry standpoint. You got to automate it because Gino and Jacob, you guys primarily just sell stuff, just sell theta, and that's why I dubbed Gino the theta maker. Noah, myself, and even Tim, we like to delta trade as well. We like to Vega trade as well because either one, we like making money in it, or two, we just enjoy it, or three, you can always make more money in terms of the ROI. But at the same time, regardless of what the style of trade you do, you have to set up the management ahead of time. And that's why I think what Jacob said was so important. When it gets to if it ever gets to the point where he has to take a management decision, he already knows exactly what he's doing. If it's on something that is not the crude oil contract, he's going to convert it to a weekly spread. If it gets down to where he has profit in it and he just wants to lock it in, he's going to lock it in. If he needs to roll it, he's going to roll it. But there's nothing out there that he actually has to assess and decide. It's just read and react because he's done it so much.
I love that. Jake, you're the guest here, so you get to have the last word on this. I mean, what's key for you on your daily routine?
Say Fibonacci, Jake.
Say
Fibonacci, Jake.
Say Fibonacci. Tim on the fit.
Usually,
Tim likes Liberace. Tim likes Liberace stuff, not Fibonacci.
He does like Liberace, actually. Jake, I want to bring it back a little bit, back to when you first start trading, because I think when people hear 4 traders get on the phone together or 5 traders get on the phone together, start talking trading, we have a tendency to just go down the rabbit's hole. When you first started trading, how difficult was it to really kind of pick up on the language?
It was difficult. I listened to Noah's talking for Master Trader for hours and hours and hours.
My deepest apologies.
I enjoyed it.
I enjoyed making it.
That's good to hear. Yeah, I studied for a long time because I figured if I can do this, I don't have to work anymore. Mm-hmm. Like, I can do this and be happy and stay at home.
So do you still work?
No, I do this. And I do film production too, but that's fun. I don't consider that work.
So kind of you got things you do from a hobby, a business perspective, but this allowed you to, quit your job so you didn't have to, work on deceased corpses, and now you basically trade all day.
So would you say you were in a dead-end job?
Well, I did phlebotomy, so that job definitely sucked.
Oh, man. Blood out of you. We could do this for hours.
Yeah, we could.
So now on a daily basis, kind of walk me through what your routine is.
So I get up. I usually stay up late to watch the futures, make sure that the Asian and the European market aren't doing something crazy, and then I'll get up right when the market opens to make sure that that's not going crazy. If like the VIX is all of a sudden like 45 out of nowhere because Janet Yellen says interest rates are like 10% now overnight.
Yeah.
I'll get out of bed, but if barring anything that happens, I just stay in bed until 12, and then I get up, or like 11, 12, and then I get up and I trade. I go through all my stocks that I have current positions on, make sure they're all still there, not doing anything I didn't think they're doing, and I just manage. So
you basically just trade and manage the last 2 hours of the day, basically?
Yeah, and it also prevents me from doing stupid things.
Kind of like Noah said.
My stupidest moments have come early in the morning when I was still groggy, trying to rub the sleep out of my eyes, and the market made me panic, and I didn't have all my wits about me. So automating that and setting alerts and doing things to make sure that I don't have to be there is my goal. Yeah,
honestly, guys, I think we're seeing a commonality in all of us. Because market opens up at 7:30 my time, and I'm kind of like you. I like to check the futures market at night. I like to check the European Open about 1 a.m. my time. It's about midnight your time. So I'm kind of a night owl every night just to make sure. So when I wake up at 7:30, 8 o'clock, literally I'll just check my phone to make sure nothing, no nuclear bomb is dropped or Janet Yellen has spiked interest rates to 10%. And if everything's normal, I'll just kind of go back to sleep. And when I get around to the market, usually about 9:30 my time, I'll check it a little bit to see if I want to enter any trades, and then I'll check it at the end of the day as well.
Yeah, and that's normally what I do. I don't get up at 11 because I have a soon-to-be 2-year-old and a very pregnant wife, so I'm up and about. But I limit the amounts I actually trade because when fear or greed comes in, I go for a walk, and by the time I'm back from the walk, the market's closed. So I can't let those emotions affect me too much.
Yeah. So you said very pregnant. How soon?
First week of September is when she's due.
Congratulations. So
Thank you.
You're a 2-year-old, boy or girl?
Boy, his name's Henry.
Henry, awesome. Is Henry going to be a trader?
Hopefully.
Awesome.
He watches me all the time. He tries to trade when I leave the room.
He hits the buttons.
Well, if his first word is Fibonacci, I'll be impressed.
It'll probably be
If
VIX
it's
or
name
Theta.
is Theta, I wouldn't.
Yeah, it's got to be Theta. Got to be Theta. And
Henry,
are
Theta,
you having a boy or a girl?
Pelly.
Another boy.
Another boy. Congratulations. 2 boys going to take over your portfolio in about 15 years from now.
So let's make them Theta traders so I don't even have to trade anymore. It'll be like mowing the lawn. Get to trading, boys.
Hey, that's what I'm trying to do with my son. Get to trading. And I think that's a commonality in all of us that have children, and every one of us do. Is we don't try to force it on them. We just try to put it around them. To kind of see what they're doing, see what we're doing, set them on our lap while we're doing our daily routine. And I think that's absolutely awesome, Jake. Your story to me is so impressive and inspiring that when you joined this program, were you 27?
I was probably 26, 25.
26, 25. So you were just mid-20s, mid-20s. You were working at a job that you weren't happy at, and you were able to educate yourself to the point where you literally could quit your job and simply be a trader and be a stay-at-home dad. Honestly, I think that's the dream of a lot of people out there.
What age were you, Jacob, when you quit your job?
It had to be 26, 27. It had to be that.
That's very quick.
So did you know going into the trading business that you'd actually be hanging up your... That's a lot of education and background to get to the point you were in medical. That was... Did you have any idea that you'd actually be calling it quits with the job that quick?
No, I didn't have any idea. But it worked
and
out.
Also, did you know that was your first goal to get your wife to quit her job, or was it you to quit yours?
It was her to quit hers.
So both of you have now quit, and you basically just trade.
Yep.
So do you still have friends that like you, or do they just all your jealousy?
There's a lot of jealousy. I'm not gonna lie. I'm pretty sure they think I rob people for a living too, but they're still friends with me because I've known them so long. So I haven't broken in their house yet.
I don't even tell people what we do.
No. Stop. Let's get rid of that emotion right there, because think about this. You're selling insurance. That's a product and a service that helps people sleep at night. You are providing a valuable service. They are giving you a premium in exchange for sleep.
And I'm giving them the sleep they need.
And in exchange, you get to sleep all you want. So therefore, it's not about stealing. It's about providing a win-win situation.
A win-win.
Listen, I have a different take on it. Jacob, you're the CEO of your family. What you're doing allows you to take care of your family. It allowed you to quit your job. It allowed your wife to quit your job. I think that's absolutely amazing. And if anybody wants to go buy a 1 Delta on the 80 contract in September on crude oil, more power to them. You as the trader, as the CEO, it's not about stealing money. It's not about anything. Money in the financial market simply exchanges hands, and money is simply going to your hands and allows you to take care of your family the way you needed to.
Well, let's call it like it is, though. I mean, Jake, who do you think is the buyer of most of your options? You think it's some guy out there?
Some institution who's insuring it.
Yeah, it's institutions. It's not. What consumer have you ever heard of that has ever even? What percentage of consumers out there know that there's a futures market to trade in?
Probably low.
Like what, 3, 4, 5%? And of those 3, 4, 5%, that's just know it. What percent have actually traded? Maybe 1%.
Yeah.
Yeah.
And of the consumers that trade, the 1% how many of them buy an 80 contract? It's the people that are buying the contracts you're selling. It's the market maker. It's the institution. That's it.
Yep.
Yeah.
That's exactly right. And a lot of times, Matt, who it is also is somebody who was in it a long time ago when it was. They sold it and now they're buying it back cheaper. Like he's selling it for a nickel. They might have sold it for a dime, and now they're buying it for a nickel.
Well, exactly. Think about one of Jacob's management techniques. One of his management techniques is to buy it back and sell it at a different strike price.
So there's somebody that's just handing the trade to him and taking it. Like he might be closing it for a nickel. Now I'm selling it. Another thing is this. A lot of people don't realize this, but there's a lot of business going on those out of the money strikes, and that's what in the mentorship that woke. I mean, I remember Jacob going, "Who in the heck is down there at those strikes?" And just like you said, who's 20-30% out of the money buying options?
Well, there's only 8,228 open interest on the 80 strike price in September right now.
Right. So there's business down there. There's some. That's open. That's people already in, and there's still volume going on.
Well,
so it's like a whole market nobody even thinks about. And I found out, a lot of times most people can't do naked options, so they might be selling the 90 and buying the 80 to make it a spread. Mm-hmm. So they have to buy that 80, and the person that's selling it to them is Jacob. So they're selling the 90 and buying the 80. They're actually at a riskier position because they have to do the bull put. We're doing the naked put on their long.
Honestly, when I'm teaching the naked put in that 3-day training that you took from Scott Jake, basically I talk about the naked put, and I always get the question, who in the world would buy that? And in the back of my head, I'm like, maybe us. If we're doing a spread, maybe us. So it's just you can't get into the who's going to do this, what market entity. It's sad that your brothers and some of your friends and whatnot think that you're stealing money. But thank goodness that you can do that, though, Jake, because look at what you're doing with your life.
Well, what I think it is I educated myself on how to be successful. You guys helped me along the way a lot. I'd probably say 100%. You guys helped me. And they don't want to do it. They're scared. There's a lot of uncertainty in the market. And you guys helped me reassure it and help me grow in this way, but they don't want to do it. And so they're saying these things just out of uncertainty.
Yeah, it's out of fear. Have you ever experienced somebody, your brothers or your friends or family members in any capacity, have they ever asked you to manage their money?
Yeah, and there's a lot of stuff that makes me nervous to do it.
Don't do it. It's a mistake. We've done it, and you're going to get phone calls you don't want to get.
Well, unless you're a hedge fund manager, you shouldn't even consider it, number one. But second thing is, just point them in the direction of education, Jake. That's what I do every time. And we were actually having this conversation earlier. This ties back in right before Jake came on. We were talking about silver. Matt, maybe you can fill him in on that and ask him the same question.
Well, we were talking about hedging against risk in terms of not the marketplace, because obviously the market has risk in there right now, and we need to prepare for that. But we were actually talking about hedging the devaluing dollar and the macro risk to the dollar, and we were talking about different ways to do that. Have you or do you invest in precious metals?
I had a couple naked puts on before the Black Swan last year for gold, and I saw far the money. It didn't affect me. I mean, I still made money out of that trade. But I really stay out of precious metal now because gold is kind of manipulated.
Well, not kind of, it is. And silver even more so. But one of the reasons why we hedge with commodities like silver and gold, like precious metals, is the what-if events. The what if the dollar goes away, the what if the dollar no longer is the reserve currency. It's a hedge against that macro risk, and some people do it in the papers, the paper assets, like in terms of GLD or SLV or the gold contracts, silver contracts in the futures market. But we're talking literally about actually owning precious metal like silver eagles, gold bullion and stuff like that. It's something that from looking at a macro risk perspective, Jake, I would recommend you looking into actually owning precious metals. You got a significant portfolio. You've done very well for you. You don't want it to go away just through devaluation. Does that make sense?
Yeah, and I own some silver because silver might overtake gold here in a couple years, just because a lot of technology companies use it and you can't recycle it in the way they make these technologies. So and there's only so much of it, so after a while there's going to be a lot less of it.
Yeah, I mean, the physical silver is very different than the paper assets, and the manipulation of the paper is kind of a triangulated scenario where it just stays in a range, and so people buy it hoping it increases in value, and when it doesn't, they don't understand why. So,
well, and it doesn't do it in a month, and they don't understand why. They don't have the long-term perspective, and kind of what Jake was talking about was the ratio of silver to gold. And we were having a conversation in the lab this morning, and we were talking about which one we like better, silver or gold. And basically, I would say the exact same thing. Is I certainly see silver overtaking gold in terms of the ratio, meaning it will go up a higher percent than gold will in the next bull run on silver and gold, but also because of technology. Gold is not used in technology versus silver is. So silver has a better technological demand than gold does. Gold is just the precious. It's what makes people crazy. And so it's just more traditional right now. But I like them both.
Was that a Gollum reference right there?
It was. I got it out there.
Nerd alert.
Listen, I will not shy about the fact that I love those Lord of the Rings movies.
Nothing to be ashamed to call it a nerd. I have a blog, and on the blog I call myself an alpha nerd. So
I love it. I love the Lord of the Rings. I love Star Trek. Love Star Wars. Love it all, buddy.
That's awesome.
Yeah.
If those all were converted to stock, which of those would you invest in?
Great question. Are we talking about future expectation?
Oh yeah, the future franchise. You don't buy based on the past.
Okay, well, let's go around the horn here. Let's go with Noah first. You got we got Star Trek, we got Star Wars. You have the Lord of the Rings. What other major franchises are out there?
You could put Harry Potter in there.
Harry Potter.
And let's put a comic book one in there. Let's put in
Marvel. Just go with Marvel.
The Avengers.
Spider-Man.
All right. Well, I'm going to go ahead and answer first because I actually am technically related to hobbits, and my nickname in high school was Afrodo. Because I was very short. I had a big afro, so Afrodo was my name, and I was a big Lord of the Rings nerd, and I'm going to have to go ahead and say I'm in.
So Noah's full in board buying Hobbit gear and stock. I love it. Gino, which franchise would you be an investor in right now?
Was the Mormon religion part of those choices or no?
Dude, if you want to invest in the Mormon religion, they're like the fourth largest organization from a financial standpoint in the world.
I was always debating between Mormon and Catholic. If they had a symbol, which one would I buy?
I think that's kind of the ratio between gold and silver.
Well, do you want the large cap dividend payer or do you want the small growth stock?
Oh, that's true.
Yeah, do you want Tesla?
ALMA.
Might stick with Star Wars ticker symbol YODA.
Wait, can I still invest in the construction of the Death Star? Are there still?
No.
Are they IPO'd that yet?
They are well past that. That was 20 years ago.
False because it's in the future. Oh wait, was a galaxy a long? I give up. I'm lost.
It's one of the two. It's one of the two. Okay, so Gino, are you? Which one did you say again?
I'm in Yoda.
You're in Star Wars. Gotcha. Jake, what are you in?
Man, you guys for traders. I can't believe you didn't bring this up. They own Marvel. They own
Disney.
Star Wars.
It's
they own
Disney.
Indiana Jones.
That's the one you buy.
Disney.
Yeah, you stole my thunder. I was actually going to start that by saying, and they created the Princess Party.
Disney. They're the franchise.
It's the franchise. It's Disney, buddy.
I feel like you guys just cheated the game right there.
We did, but
yeah, you got to pick somebody that doesn't have a symbol.
Well, first of all, Jake is a known cheater. He got Gino's cheating spreadsheet.
Right, and he's selling two deltas. I love it.
That's what's nice about this. You're allowed to cheat in this business, Matt.
Well,
everybody's trying to find an easier way to do things, and that's what life's about.
You know those little yellow wristbands that Lance Armstrong popularized, like the Live Strong wristbands? Yeah, I've got mine, and actually he could probably support these now. Cheat to win is what it says.
even if you have to lose a nut to do it.
Oh, wow. And scene.
And we've hit new lows. Let's stay there.
Time to buy.
Matt, you can't answer Disney. Jake took Disney, so you got to go with a different one anyway, and you got to be true to the game. Come on, play that game.
Fine. First of all, Star Wars. Excuse me. Let me go through. I would not do Lord of the Rings. They only have one more movie coming out, and they have no other books to go on, so that's kind of a depreciating asset. I wouldn't do Harry Potter because that's already gone and dead. I wouldn't, and so I'm looking at Star Trek, Star Wars, and Star Trek. I love what's his face, the director. Oh, what is his name?
Abrams?
Abrams. I love what Abrams did with the reboot of the franchise. Really good, solid. But when you look, but Abrams is now on the Star Wars as well. And what I see coming from Star Wars, you got 3 more movies coming from Star Wars. You got theme parks coming from Star Wars. You got a built-in fan base that is absolutely nuts and crazy. And they're going to reboot different books, they're going to bring back the action figure again. I think it's Star Wars all the way. I think Star Wars is the best one of the bunch.
I told you, Matt. I told you.
You guys are all crazy. Star Trek. Anytime the Shat is involved, I'm with him.
No, but we're
Give me
talking about the
Shatner
future.
every
The
time.
Shat's 87 years old, riding
Dude,
horses in
he'll
Wyoming.
live to 130. You watch.
I have no doubt. He's probably still... I was listening to a podcast with Shat on there, and he sounded like he was 50. He's literally like 85 years old. You know,
Yeah.
Hey, you guys remember Shat when he had a whole bunch of shares of Priceline? Do you remember that story?
No.
When he promoted Priceline, they gave him thousands of shares. He was like a major holder of Priceline options and shares.
So when he became the spokesperson?
And it went down to like $2 and he had a fit. And he tried to sue him because it wasn't worth what it was when they gave it to him. They said, hey, it's down 80%. This is BS. And he tried to sue him.
If only he would have known.
And
now look where it is.
And now it's $1,250.
You know, you guys are listening to the Trading Justice podcast. We've got Gino Poore, Noah Davidson, myself, Tim Justice, and Matt Justice. And joining us today is Jake Pelley. Our special guest, a student of Rich Dad Education, came through the program, took classes from everybody but myself, Jake. And in fact, I think I've only met you the one time at the Hall of Fame ceremony.
I want to talk about that Hall of Fame ceremony real quick, because Gino tells the story, and I want to make sure he's not doing the old fishtail, where, you know, every time he tells the story, it gets a little bigger and a little bigger. when you were nominated and were announced as a Hall of Fame student, once again, you've never taken a loss in the last 3 years. That's unreal. But when you were there and showed up, what city was it in? Was it in Vegas or Reno or?
It's in Vegas.
Okay, it was in Vegas.
It was in Vegas.
So you went to Vegas, and for those of you who don't know, we're all mentors with Rich Dad Education, and the Hall of Fame ceremony is a big deal. I mean, it's one of the highest honors we give in Rich Dad, and we've only been doing it on the stock side for about 3 years now. And Jake, you might have been the inaugural one, I think. Was he the first stock one we nominated?
He was the first one to make stock in Robert Kiyosaki's organization.
Yeah, because like, for those of you who don't know, Rich Dad is primarily real estate, so they've been doing Hall of Fames on real estate for years and years and years. We just barely started doing it on stock, and Jake was the inaugural Hall of Fame student. Big deal, black tie. You get to meet amazing Robert and Kim Kiyosaki. And Gino tells us that you showed up wearing a T-shirt.
To the Hall of Fame to actually get my award?
Not to get you.
To the dinner.
I can vouch for this. I did see him in, I believe he was wearing Birkenstocks, some khaki shorts, and I believe it was a character T-shirt.
Ghostbusters,
Was
right?
it Ghostbusters?
Yeah.
Oh, wow. Oh, wow.
I had to look down. I'm currently wearing Birkenstocks, khaki shorts, and a "What Did the Fox Say" shirt.
Is that what it was? Okay, fantastic. So at least you're consistent.
Donald Duck.
I had Ghostbusters at the time, but that shirt's worn out. My wife secretly.
I think you eBayed it.
So basically, you show up wearing a T-shirt, Birkenstocks, and honestly, I think you represented the stock side of our business beautifully.
It was a good honor. I mean, this 100% naked puts is awesome.
I like it.
Yeah.
I like it. If you were to give some advice to somebody new to the market, somebody who's going through Master Trader, or somebody who is just, you know, really kind of just, you know, wanting to do it but doesn't know the right way to go about it, what would you suggest? What advice would you give them?
Get educated, get a mentor. Like, hands down, those are the two things you should do. You should probably get a mentor and get a mentor while you're getting educated.
Mm-hmm. I love it. I love it. Education, mentor. I think you're starting to see some commonalities in every one of our success guys. We're all students first and traders second. And if you want to learn how to trade, if you want to start becoming like the Jake Pelleys of the world and taking 10,000 trades, never taking a loss, cash flowing 5% monthly returns, changing your life and quitting your job, the first step is always get educated. Seek out people that know how to trade, that can help you out and put you on the right path to success. Jake, now one thing we do on the Trading Justice podcast is we allow our guest to pick the sound, the music to go out on. So, Jake, give me a song you like.
Let's do Back in Black by AC/DC.
No, that's our intro song.
Oh, you can't. Oh, okay.
Seriously, I'm really liking Jacob Pelly, by the way.
That was just a jib from the Friday thing.
Yeah,
I like it. Yeah, thank you. Matt didn't even get the joke. I don't think he caught it.
Oh, somebody fill me in, please. In the pain.
Bon Scott, Brian Johnson, the two lead singers of
Oh
AC/DC.
my God, I can't believe I missed that joke. Oh yeah, Tim, you're so pathetic.
Listen, I admit I probably dropped 10 notches on my my man card.
You did?
By not
did.
knowing that. I'll
well,
embrace
it's
it.
not knowing that. It's the fact that you thought it was still Axl Rose.
Axl Rose?
Yes, Jake, we're sitting there talking about, I can't remember what we were talking about. Talking about AC/DC or whatnot. Tim says, well, when Axl Rose, and I'm like, do you really think Axl Rose was the AC/DC singer? He's like, yeah. I'm like, are you kidding? So yeah, he thought it was Axl Rose.
I'm a huge metal, hard rock fan, so.
All right, give me a metal song then.
So let's go From Whom the Bell Tolls by Metallica.
Oh, that's one of my favorite.
Matt's like quickly downloading For Whom the Bell Tolls.
Well, yeah.
Metallica, Matt,
he'll find it.
It's not. It's no. That's why we have YouTube, guys.
Yeah. Jake, you've done a couple of these podcasts, and people are starting to ask you to come on. Do you enjoy coming and chatting with traders and hanging out?
And this is my second one I've ever done, and a little nervous, but I enjoyed it a lot. And I'm in Fresno, and there's no one to talk stocks with. Like, I am so starving to talk stocks with anyone here.
I'll tell you, Jake, we want you as a regular on the podcast, buddy.
That'd be awesome. Yeah, I literally, I'll go to parties, kids' parties, and I'll corner people like, hey, man, have you heard what Janet Yellen done today?
What percentage of the people you talk to about Janet Yellen that actually know who she is?
By the time I'm done with them, 100%.
Okay, when you're done, but when you intro it, when you say Janet
Yellen,
Yellen,
you get the urge to teach.
Yeah. Oh, yeah. You would be a good teacher. Teach the naked puts. And
the funny thing about that, I got to tell a story about Matt. I picked up Matt from the airport about 6 months ago, Jake, and it was one of my friend's birthday parties. So we stopped in on the way to my house, and Matt had just been out doing a class for like 4 days. And Matt is just talking about the Fed and quantitative easing the whole time. Like, the entire party moved to the other side of the room except for this one female, this lady, and her and Matt just talked for like 3 hours. So if you bring up the markets, there's usually at least one person that will listen.
First of all, she was like 78 years old, and she was interested in the markets because she had traded at some point in the past. Literally, she was like a grandmother. And nice lady, very, very nice lady. And
You're blowing my mind. Were you at Jackson Hole?
I want to be at Jackson Hole. Yeah. By the way, the Fed is meeting at Jackson Hole this week. You guys are all aware of this, right?
Road trip!
That's right. Let's do it. Pack it up. Pack the bags.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.